Hey everyone, it's your channel name. And let's be real, nobody likes paying more taxes than they have to, right? Especially when you're hustling and grinding to build your own business. If you own an LLC, you've got a powerful tool at your disposal: tax deductions. Knowing which write-offs you're eligible for can literally put thousands of dollars back in your pocket every single year. It's your hard-earned money after all. So, in today's video, we're diving deep into the best LLC write-offs for 2024. We'll cover everything from startup costs and vehicle expenses to home office deductions and beyond. Stick around to the end for some golden nuggets of wisdom to make sure you're maximizing your tax savings this year. Without further ado, let's dive right in. First up, let's talk about startup and organizational costs. Now, starting a business isn't cheap. Right, there are so many things to consider and budget for. You've got legal fees, website design, market research, maybe even travel expenses to scope out the competition. These costs can add up quickly. The good news is the IRS lets you deduct a lot of these expenses. This can significantly reduce your taxable income. You can deduct things like feasibility studies, market analysis, travel for site selection, even those late-night coffee runs while you were drafting your business plan. Hey, caffeine is fuel for entrepreneurs, am I right? But seriously, keep all your receipts. Every single one can be crucial when it comes to deductions. Now here's the catch. You can only deduct up to $5,000 in startup costs in your first year of business. Anything over that gets amortized, which means you spread the deduction out over 15 years. I know it's not as exciting as deducting it all at once, but it's a practical approach to managing your finances. But hey, a deduction is a deduction, and it's still better than nothing. Every bit of savings counts. Just remember to keep meticulous records of all your expenses. This will make your life much easier come tax time. Think of it like this. The IRS is like that friend who always borrows money and conveniently forgets to pay you back. You need to be prepared. You need to have detailed records to prove what they owe you. This is crucial for your financial health. Trust me, you don't want to be scrambling for receipts when the IRS comes knocking. Preparation is key. Get yourself a good accounting software or even just a trusty spreadsheet and keep track of everything. This will save you a lot of headaches. Tax laws can be complex and vary depending on your individual situation. It's important to stay informed. It's always a good idea to consult with a qualified tax professional for personalized advice. They can help you navigate the complexities. Next up, we're diving into the world of vehicle expenses. Stay tuned to learn how to maximize your deductions in this area. Let's talk about one of my favorite deductions, vehicle expenses. If you're a business owner or self-employed, don't overlook this. Track your business miles for significant deductions. Every mile you drive for business can add up. Only deduct the portion of your vehicle expenses related to your business. Keep detailed records. Client meetings, supply runs, and trips to the post office are deductible. Separate personal and business mileage. You have two options: the standard mileage method or the actual expense method. Each has its own benefits. The standard mileage rate for 2024 is 67 cents per mile. It's straightforward and popular. Drive 10,000 miles for business. That's a $6,700 deduction. The actual expense method tracks all vehicle-related expenses. It can be more complex, but might offer a larger deduction. I prefer the standard mileage method for its simplicity. A mileage tracking app can be a lifesaver. Now let's move on to our next big deduction: marketing and advertising expenses. All right, let's talk about marketing and advertising. The good news is most of these expenses are 100% deductible. Think about it. Facebook ads, Google ads, influencer marketing, SEO, even those fancy business cards you had printed. They're all investments in your business, and the IRS knows it. The key here is to make sure your marketing expenses are ordinary and necessary for your business. So, if you're a plumber, spending thousands of dollars on influencer marketing on TikTok might not fly with the IRS. But hey, if you're a social media manager, go for it. Just make sure you can justify your expenses and show that they're directly related to generating income for your business. The IRS isn't trying to stifle your creativity here. They just want to make sure you're playing by the rules. And speaking of playing by the rules, let's move on to our next deduction: home office expenses. Let's talk about the home office deduction. This can be a game changer for small business owners and freelancers working from home. If you're running your LLC from home, you could be eligible for tax breaks that reduce your taxable income. But there are important rules to know. Your home office must be used regularly and exclusively for business. No personal tasks allowed. The IRS is strict about this. Your home office also needs to be your principal place of business. For calculating your deduction, you have two options: the simplified method or the actual expense method. The simplified method is easier, taking $5 per square foot of your home office space. For example, a 100 square foot office gives you a $500 deduction. The actual expense method requires detailed record keeping of home-related expenses. Track expenses like rent, utilities, and repairs, then apply the business use percentage. Consult your accountant to determine the best method for you. All right, for all of you who've leveled up from the home office and are now renting a dedicated office space, this one's for you. Renting an office can be a big expense, but the good news is it's also a big deduction come tax time. That's right, you can deduct 100% of your rent payments as long as the space is used exclusively for your business. And it's not just the rent itself. You can also deduct all those associated expenses like utilities, repairs, and even those fancy espresso machines that keep you fueled up during those late-night work sessions. The IRS wants to make sure you're not trying to pull a fast one and deducting your entire apartment as an office. So make sure the space you're renting is clearly designated and used solely for business purposes. But as long as you're using the space legitimately for your business, you can enjoy some serious tax savings by deducting your office rent and related expenses. And that brings us to the end of our LLC tax deduction extravaganza. That's all for today's video. Remember, this is just a general overview, and tax laws can be complex. It's always best to consult with a qualified tax professional for personalized advice. If you want to learn more about taxes, real estate, and building wealth, make sure to hit that subscribe button and ring the notification bell so you don't miss out on any future videos. And hey, if you're ready to take your business to the next level, check out the links below to learn more about my company and how we can help you achieve your financial goals. Thanks for watching, and I'll see you in the next one. Cheers. If you want to work with my company or advance your tax knowledge, check the links below. See you in the next video. Cheers.